Well, hello everyone. Thanks for joining us here today. We're glad you're here. I'm Brent with Algorithmic Trading, and glad you take the time to come and see what we have to say today about our algorithms. We are having a fantastic year, and I know you've probably looked at us before and have maybe even talked to myself or Rich before, and we're just glad that you came back to take a second look. In just a minute, our owner-developer, Richard Metzger, will be on the line. And, we're really asking the question, why aren't you using us yet? Because we're having a great year. And I think we're going to be able to answer some of those questions today that may help you understand what you're missing by not using our algorithms the way they're performing and have performed since 2013. So at the end of this, though, we're going to give you opportunity for myself or Rich to call you. And what I'll do is, since there's several people that will be on this, I actually can't call everyone that attended. So at the end of it, I'll ask if you want myself or Rich to call you or email. We'll just ask you to type that in the chat and maybe a phone number and email that we can get with you and answer any other questions you have in detail. We intend to keep this fairly short today. We want to know your time is valuable, and we'll answer any really specific things over the phone or via email with you after that. So with all that said, thanks again for coming, and Richard Metzger is here. And he's going to join us and kind of answer some of those questions here today. Thanks, Richard.
Hey, thank you, Brent. Thanks, everyone, for attending. As Brent said, we're going to be giving a performance update today, and I'll be walking through just how we've done this year on the 4 packages that we offer. And I'll also be just highlighting how we've done in kind of the recent market move with some of the increase in volatility that we've seen the last couple of weeks. But with that introduction aside, why don't I just get started? So I always like to start by just giving the disclaimer. So everyone keep in mind that I am not a commodity trading advisor. We're what's called a third-party trading system developer by the CFTC or NFA. In essence, what we do is we offer a computerized traded system that is traded under a letter of direction. We do not directly control your account. This is not a power of attorney. To be clear, we do not offer managed accounts. We are, again, a third-party developer. So what that means for you is that the data that we show is not audited by any government agencies. So we're in essence, a software company offering our algorithms for their use. You have full control over your account. You have full discretionary control. You can let the algorithms run. You can also get out of a trade early. You can adjust the ratio of trades. There's a lot you can do. You can even place your own trades in your account. So again, we don't control your account. We don't touch your money. We don't get any kickback from the broker. And so with that disclaimer aside, just also remember that trading futures does involve substantial risk of loss. It's not appropriate for everyone. And you can on the video playback, you can at least pause this and read some of the disclaimers if you want a little bit more carefully. But with that aside, I think I'll just go ahead and kind of get started here. So I'll be talking about 3 different kinds of data today. The data that I'll be talking about is going to be either back tested, which is going to be the most optimistic because it has the benefit of hindsight. We'll also be mentioning blind walk forward from the sim account. This is, when we talk about those results, it's really after optimization has been done. So it's not back tested, but it's still from a simulated account. And then the live results that we'll also be showing are the actual live from the account. And so that's going to be the most reliable data that we have. Most people care pretty much only about the live data. I do personally think the back tested and in particular the blind walk forward from the sim account is also helpful, but really the live is what matters the most. So speaking of the different kinds of data, I'll start by just showing some of the back tested results. So again, what this is showing is really when we back test the model going all the way back to, typically we go back to 2003, then this is the results that it shows. So what this shows is the results from TradeStation, assuming that someone traded the algorithm. But again, it has the benefit of hindsight, and so it's going to be by definition, it's going to be more optimistic. but it does give us an idea of what we might be able to expect in the most optimistic conditions for any given algorithm. But what you'll see is that we have the wave trader, the swing trader, the crusher, and the pro trader. And on the website, we show more detail on these, but in essence, each one has its own set of strengths and weaknesses. The most popular system we have is probably the swing trader. It's traded live the longest, and it's actually probably done the best overall. But the pro trader and crusher have also done well. The wave trader's done well. They all have their different strengths. But why don't I just kind of jump into the results though? So this is from the swing trader live account that we monitor. So again, this is live data now. What you want to remember though is that past performance is not indicative of future performance. So just because we've had these results the last couple of years doesn't mean that that will continue. But what you'll notice is that this account started February 2017 with $40,000, and as of today, August the 8th, it had about 132,000. So it's done really well. There's been some ups and downs for sure. 2018 was more of a sideways moving market for us, and we did really good in particular in December when the market sold off. But some of the other periods were more kind of up and down. 2019 though, we've had an amazing year, very similar to how 2017 was. So overall, since February, this account is up $23,102 per contract traded. So, and this account was trading 40K with 4 units. So it was a very aggressive allocation. It was 1 unit per 10K, and it worked out very well actually, because it was an aggressive allocation and we happened to start it right when the market really started taking off. So we do also try to normalize the returns though to a per contract number. So that, because this account is not compounded. So that's what the per contract PL shows, is how much it did on a net liquidating value each month per contract traded. So August, this month, we're up about $678 as of maybe about an hour ago. So let me jump into the next slide now, and because what this is showing is also live data only for the year though. So this is only 2019. And what we're showing is the top is the swing trader, the next one is the crusher, then the pro trader, and then the wave trader. And so this is showing the 4 live accounts, or the 4 algos on the live account. And you'll see the swing trader numbers will match what we showed in the previous slide. So it started with, at the end of January, had 91,506 in the swing trader. As of right now in August, has about 132. So that's year to date gain of over 40K. Well, you'll notice the crusher has also been actually on a really big tear. It's been doing actually incredible. It's up quite a bit more actually. Keep in mind though that it's trading 5 units as opposed to 4, so it is trading a little bit more. So the dollar gain can be, well, you just have to kind of normalize it to the per unit, which is what I do on the next slide. But if you want to see the pro trader, it's one of the newer packages that we started offering this year. The pro trader account right now is up about 9,535, and then the wave trader is up about 6K. So and on the video playback, you can pause this and look at it a little bit closer. But really the intent of this is just to show how each algorithm is done on a monthly basis for this year, just to give you an idea of what they've done. Because a lot of people ask, they want to know which one's doing the best, or which one, or just to kind of see the side-by-side comparison of the results of this one. So let me go to the next slide now, because what this is showing in essence the year-to-date summary, again, as of today on each one. And so all I've done is I've listed the unit size, which is 20,000 on the wave, 20,000 on the swing, the crusher's 30,000, the pro trader's 30,000. And then I just normalized the profit to a per unit profit loss. So the swing trader for the year is up $11,118 per unit traded. The wave trader is up about 6K, the crusher's up about 15K, and then the pro trader up about 9K. And then all I did is I just created the percent P&L. Now, again, the disclaimer is that this isn't for everyone. There's always risk. I am showing you 2019, which has happened to have been a great year for us. The drawdowns can vary in scope, but we do show that on the website and on that previous slide that I showed you as well. So just remember, there's always risk. There's no such thing as a holy grail trading system. Even with what we do, with the results we've had, there are times when we really do feel almost like, even though we're up, we might not be up. It's weird in the market. You're almost guaranteed to be slightly disappointed, just because unless you can pick the exact top and the exact bottom, there's always going to be some left on the table. And so even with the results that we've had and our customers have seen, there's still a feeling at times that we could have done better, and that's for sure true. But at this point, I've grown more used to just being okay with what the algo does, and not try to just make it this perfect thing that will never have any losing trades. The reality is that just does not exist. There's always risk in trading. We trade futures, which are that do have more risk than equities. But this is a fully algorithmic trading system, 100% automated. It's traded under letter of direction. But now what I'd like to do is go ahead and just start showing you some trades so that you can kind of see the chart. So now that you've kind of got an idea of what we've done, and again, on a percent basis, the swing trader's done the best. So it's up 56%. The crusher is next, and it's about 51%. The crusher's made more, but again, it trades a bigger unit size. So on a percent basis, it's actually a little bit less. The wave trader's done really well. The advantage of the wave trader, by the way, is that it's a little less volatile. So it tends to do really well in sideways markets, and you don't lose your mind quite as fast, but because it's just a little less volatile. But why don't I start with the swing trader? What you're looking at right here, this is the swing trader algorithm, and I'll kind of blow up the chart a little bit. So it trades the S&P E-minis along with the 10-year note. This is a chart of the S&P, and so what I really want to do is just kind of zoom out. This is basically the start of the year. So this is when the market sold off in December. This is January, February, March, April, May, June, July, and then August. A couple things I want to point out. Notice as the market rallied, we jumped in and out, and we had a really good run. And that's one reason why we're up so much, is because of this run. As the market sells off, this algorithm is really good at getting on the sideline. Now, again, this is the S&P that we're looking at, the S&P E-mini. And just so you know, that this is showing the TradeStation simulated account. So these aren't the actual trades that we placed. Although if we were to line up the trades, they would match for the most part, because the algorithm is what drives the trades. So if I zoom in a little bit though here, we'll look at how the algorithms performed as the market sold off. So again, over here we're looking at May. This is June, early June. The market rallied. We jumped back in. We had a really good June, I believe it was. And then July was just a little bit sideways and down a little bit for us. But notice how when the market rolled over, this algorithm got on the sideline again. We actually got out of the market on the 1st of August right here, and then the market sold off. So we actually avoid the majority of these losses. As the markets rallied, we're also still on the sideline, and I can tell you we will jump back in probably pretty soon if this rally holds. But the key for us, at least on the swing trader, is we get on the sideline on the S&P as the market rolls over, and on the 10-year, what you'll see is that we actually hit it out of the park. In fact, if I zoom out, you'll kind of see it. For those of you that have followed the videos in the other webinars, you remember that I talked a lot about this spike, and we did a webinar, I think in February maybe, and none of the data from this point on had happened yet. And I was talking about how we were long and we had a spike and the market and the 10-year sold off. But what you get to see here though is now the kind of walk forward returns that we saw, or the trades that were placed. So this trade that we were in ended up getting out kind of in June, and then we jumped right back into the 10-year. By the way, if you if you're following the news, you know that the 10-year, the rates have been plummeting, which is what's caused a lot of the gains that we've seen this year. But we jumped back in on the 4th of June, and then we got out of that actually recently on the 5th of August, right in here. And so, so the 10-year, bottom line, we've been long the 10-year, definitely for the whole year for the most part. But even in 2018, we were long the 10 years. So we've been long for quite a while the 10-year, and that's been a great trade for us. But that's in essence the swing trader. So the swing trader trades both of these. It trades the 10-year and then also the ES, the momentum ES algorithm. So when you put it together, we have an algorithm that does good when the market goes higher, and an algorithm that does good when the market goes lower. Because notice how the 10-year spiked as the market sold off. So that correlation has held. The next one I'll talk about real quickly here is called the wave trader. The wave trader is, for the most part, the same as the swing trader. It trades the 10-year, that's this one right here that we were just looking at. But then it also trades this Geronimo algorithm. Now the Geronimo, if I zoom out, it looks a lot like the momentum ES algorithm. If we lined them up, they would actually look very similar. But if I zoom in, what you'll notice is the wave trader actually shut off a little bit before the swing trader did. Remember, the swing trader got out on the 1st of August, right in here. This one, its last trade was actually the 31st of July. It got out on a gap up, and then the market sold off. So what this algo is really good at is kind of avoiding some of the volatility before it kind of begins. And it's been trading live now since January of this year. That's this algorithm right here. And again, the wave trader consists of these two. And so it's done really good though in the live trade so far. It's for the most part done what it was designed to do, which is get out a little bit early. Now the cost of that though is that instead of having some of the really huge gains that we have on the swing trader, the wave trader has some smaller gains, but it tends to be a little more consistent. So there's less volatility in the account is the bottom line. But the cost of that is smaller returns, because with the reduction in risk comes the reduction in potential returns. So let me quickly go to the crusher now. So the crusher is one that is actually traded live for about as long as the swing trader. I guess maybe a year less, but it's been at least 2 years on the crusher. And really what the crusher does is it takes the swing trader algorithm, the first one we looked at that has the 10-year note, which is this one over here, and the ES algo. And what it does, it takes those two, that's these two here, and then it adds these 3 day trade algorithms. Now the day trade algorithms are I won't go into a lot of details on them, but basically 2 of them are short. You've got this one on the top, which is called the gap short. And what it'll do is it'll look at some of the gap ups that you have and go short, and then try to get out with a gain when either the target's hit or the market closes. So I'm trying to zoom in on this trade. This is, I think, the last trade we had, and it was on the 19th of July. We had a gap up, it went short, and then it got out when the target was hit kind of midday. That's the gap short algorithm, and it's a newer algorithm. It's done okay, but it hasn't really done spectacular, to be honest. I mean, it's just kind of done okay. This year, it's done a lot better though than it did in, I believe, 2018. But these day trades, what they do is they try to offset or they try to smooth out the equity curve in essence. The other short algo is this one right here, and we actually have had a couple trades in this week, which is what you might expect as the market goes lower. So we had a trade yesterday. We went short right here and got stopped out pretty quickly, actually, right here. But then before that, we went short on the 5th of August, and we shorted the market at 28.73, and then we covered at about 28.37. So this gain right here was actually pretty big. It basically went from 74 to 37. So I mean, almost a 40-point gain, which is about $2,000. So one reason why the crusher has done so well in August is because of that trade right there. This other day trade algo is really just a breakout day trade. So what it's doing is it's looking for strength in the morning, and then it'll buy and then get out at the close. So here was a winning trade it had, and here's another one. So these day trade algorithms this year, they've actually done really well. 2018, they struggled a little bit more. And so I'm still in the process of collecting data on the day trades. But so far, they tend to be doing really well. So let me now show you the last algo, and then we'll begin to wrap it up. The last one is the Pro Trader. So what the Pro Trader does is it basically takes the crusher, these 5 algos, and then all it does is it adds this Geronimo algo, which is in the Wave Trader. So really the Pro Trader is 6 algorithms, and it trades those. So it basically trades those 6 algos. So what it does is then it kind of doubles up on the S&P at times. When it's a high probability trade, it'll double up. Otherwise, it'll just take one S&P trade, just like the swing trader does. It also does the 10-year note, and then it also does the 3-day trades. So the Pro Trader is if someone asked me, well, what's your best algorithm? I would have to say it's the Pro Trader is the one in the analysis that looks the best, but it's really only traded live for about 6 months now, roughly. So we're still collecting data on it. But that's kind of misleading because 5 of the algorithms have traded live for a couple years because, again, it's really the same as the crusher, just adds that one other algorithm, the Geronimo. So that's what makes it a little bit hard to answer that question. It also depends on what someone, if someone is really looking for the live data, then the swing trader's done the best. If it's a percent basis, then the swing trader. But if it's a function of the profit loss and also the drawdown, then the Pro Trader, because the drawdown on the Pro Trader is a little bit lower. But it really just depends. And as a developer, we're not allowed to give advice. Again, I'm not a CTA, so I can't give you any advice at all. I can't even come close to that. So what we do instead is we just present you with the data that we have and let you make a decision. Now, if you do have an interest in what we do, then what you can do is you can reach out to an actual commodity trading advisor or some kind of financial advisor that's registered, and they could give you advice specific to your situation. We'd be happy to talk to them as well, so we can show them the data. Whatever you need from us, we will be able to support. But we just can't give you advice because we're not registered again. For the most part, that summarizes what we had. But I do want to pass it off back to Brent. Let me get the slides back up first, though. So just bear with me one moment while I get those loaded again. But yeah, so, and then we'll talk about the get started steps and how all that works. But and I can hear Brent coming on again. So I'll let you talk, Brent, while I upload it.
Sure. Yeah. Well, we hope this just has provided you, kind of a good basis and understanding of what we're doing this year and why we're doing so well. So, I know there's a lot of people on here and would love to talk to every one of you personally. And I will put up my email address there and maybe even a number. But really, if you're interested and want to know more immediately, all I'm asking you to do is just type into the chat that you want me to call you or email you. And if you don't mind, put in that phone number or that email address so I can do that. If I don't get it today, I'll definitely get it tomorrow. I know there'll be quite a few, so it's okay to do that. But I'll get with you as soon as I can. Hopefully today, I'm going to try to do that. I've committed the time this afternoon to do. So we'd love to have you trading with us. A lot of times people won't move forward because they don't trust it. They don't believe the results are real. And what we've done is try to take the time to show you that it's trustworthy, as we've been around since 2013. And the results are real. You've seen the trades that are taken there live on the account and on the chart there. So those are the same trades I get in my account. Those are the same trades Richard gets in his account and all of our other 100 clients that do that. And so it is trustworthy and it's also profitable. And so we want you to start with us, and I'll be happy to answer those questions. So the way you do that is just simply put that in the chat that you want me to call you or email you, include the number there as well, and I'll do that as well. And also, as you see on the screen, there's a time where you can call me, that you can call the office, or you can send me an email at brent@AlgorithmicTrading.net. And I'm going to go back over here to chat to see if there's any questions we had, Richard, that you may be able to answer. And let me see that. Yeah, one of the questions was, can you trade an IRA? And the answer to that is yes. You would simply kind of do a rollover into that. You would roll it from whoever's currently holding that into the account with either the Fox Group or Interactive Brokers, and that would be the way to do that. So yes, you can trade an IRA in that. If you have any other questions, feel free to tap those in. And we did have a question about minimum requirements of what it is to trade. Richard, do you want to address that, or would you like that, or we can do that, one-on-one?
Yeah, I can address it too. So the minimum to trade really is set by the broker. So it depends on the broker you pick, but what we do is we create a unit size so that we can have some kind of account size to kind of base our percentages off of. In essence, to start with the wave trader or the swing trader, the first two that I showed you that trade the two algorithms each, we show a unit size of 20,000, but the reality is you could get away with something as low as 12,000. You could even potentially go as low as 10,000. Wait, Brent, do you mind putting your mic on mute, maybe? Yeah, thank you. Yeah, so it really depends, but you can think of it as about 12,000 would be the bare minimum. We do it at 20,000 though. A lot of our customers are at 15,000 unit sizes. So again, it's set by the broker, and like I said, I mean, the data that I showed on the TradeStation account, that's showing the SIM account that the algorithm is based off of. And the way it works is when a trade is placed, it automatically gets sent to all the client accounts, and the broker's the one that does that. So they're the ones that monitor that. But the reality is the trades you see on the chart, technically those are SIM account trades, and there is a distinction there. But as Brent rightly pointed out, I mean the trades are in essence the same because when the trade gets placed in the SIM account by TradeStation, in essence, it then gets sent out to the gain capital accounts. Yeah, so hopefully that answered that question.
Yeah, one other question was, will this work in Indian markets?
Ooh, that's a good one. I guess the answer is no. However, we do accept clients from most countries. In fact, I'm 99% sure that customers from India are accepted. We can even support Canadians through, I know, which is a weird thing to say, but through Interactive Brokers. And Canadians typically have been some of the ones that are a little bit harder to get approved for the U.S. markets. Most brokers, for whatever reason, won't support Canadian. But IB does, and we support IB. So the answer is no, because really what we do, to the question on the Indian markets, the reason why is because we really are only trading two things. We're trading the S&P E-minis and the 10-year. And we trade those because they're the most liquid, and our results have been really well. They pair very well together. It's kind of a pseudo arbitrage strategy because they do have a negative correlation. To add the Indian markets to it, there's nothing that would limit us from doing that. In other words, I could load the Indian market on TradeStation. I'm assuming there'd be a symbol I could load for that, and I could run the algorithm, and I'm sure it would do very well. But for one, there's no need for us to do that, and because we trade the S&Ps and the 10-year, and we kind of stick to what we know really well, and it happens to be the S&P and the 10-year. So great question, though. Yeah. Any other questions we can answer?
Well, yeah, Richard, I know we try to keep this at 30 minutes. I know some of you are at work, may need to get back from work. So that's all the questions right now. We want to make sure that we've honored your time well. Go ahead and type in chat again if you want myself or someone from our office to contact you just with an email or a phone number. We'll be happy to do that. And you know, we really love to see you get started with us and start making some of these returns we've talked about today. So that's all I have, Richard. Anything else you want to add? And I'm going to check one more time for another question.
Yeah, I think the only thing I'll kind of end with is just to highlight the year-to-date summary. So the goal of this webinar was to really just show people, you know, what we've done this year. And in essence, these are the numbers that we show. Now, keep in mind, again, there's a lot of disclaimers with all this. These numbers do not include our one-time fee or our maintenance fee. They do include the broker fee, though. So the commission that the broker charges, they include. So keep that in mind as well. And just, you know, you guys know me. I mean, I like to kind of do my best to emphasize the risk as well. There's no such thing as a free ticket, or, you know, Brent and I always joke. I mean, you're not going to see us in front of a Ferrari or, you know, anything like that, because we don't want to convey that this is easy money. But we don't want to sell ourselves short either, because the reality is we've done amazing. I mean, we really have. I mean, these are live accounts that have done this fully automated. This is an algorithm that's placed the trades. There's no discretionary trading going on that I'm doing, at least. Now, again, customers are able to. You control the account in the end. But our customers that let the algos run, they've seen results very similar to this. You know, the fills for the most part are the same between customers. We really haven't had any issues there either. A few other things real quick. You know, we are on the BBB. We have an A+ rating. We really do our best to take care of people, you know, so that if you have an issue, you know, we're going to work with you and try to resolve that. But we do like to remind people the risk. You know, again, it's not for everyone. Futures involves a lot of risk. But if you're the type that maybe you're a day trader, or you've given trading a try and the emotions of it are driving you crazy, or maybe you just have been curious about these alternative investment vehicles, I think what we have is one of the best you'll find out there. Because of our transparency, you know, we're in the process of having our statements for some of these accounts audited, so that we should be able to provide that very shortly. You know, we really have nothing to hide. I mean, we've done such a good, you know, an amazing job as far as the returns go, especially this year, that we really do have a lot to be proud of, and we do like to share that, you know, with everyone. So hopefully that helps, and I'll get back over to you, Brent.
Yeah, well, thanks again, and thanks for taking the time to do that. And we'll leave this up. You can still type in your email or number if you want me to contact you and talk and answer a few more detailed questions. But we're done for the day. And usually we try to send out a recording of this. And if so, you'll see that in your email. And we appreciate it. And look for our next webinar here over the next week or two. And we'll join in again. Thanks, Richard. And thanks, everyone. Thank you so much.
Thanks, Brent. Thanks, everyone. And yeah, let us know how we can help. And we'll talk to you later. All right, bye.